Ever wonder who the father of value investing is? In the world of finance, one name stands out as a beacon of wisdom and innovation: Benjamin Graham. Known as the father of value investing, Graham has left an indelible mark on the world of investing and finance, shaping the way many of us approach investing today. Graham's influence extends far and wide, with his teachings reaching the ears of some of the most successful investors of our time. One such investor is the legendary Warren Buffett, who has often credited Graham's principles as the foundation of his own investment strategy. Buffett is just one example of the many who have been influenced by Graham's revolutionary approach to investing. From his groundbreaking books, Security Analysis and The Intelligent Investor, to his lasting impact on the investment world, Graham's contributions to the field are nothing short of remarkable. Stay tuned as we unravel the life of Benjamin Graham, the genius behind value investing. Benjamin Graham, born Benjamin Grossbaum, entered the world on May 8, 1894, in London. The son of an importer and a devoted mother, Graham's early years were marked by a comfortable lifestyle that was soon to change. When he was just a year old, the Grossbaum family crossed the Atlantic, settling into the bustling metropolis of New York City. However, the family's fortunes took a turn for the worse with the premature death of Graham's father. The family business faltered, and the Grossbaums found themselves grappling with financial instability. Thrust into the harsh realities of economic uncertainty at a young age, Graham quickly learned the value of financial security. The financial struggles that marked his childhood left an indelible mark on young Benjamin. He saw firsthand the devastating effects of economic instability and the importance of financial prudence. This early exposure to the world of finance would eventually shape Graham's approach to investing and his philosophy of value investing. In the midst of these challenges, Graham proved himself to be a highly driven and academically gifted individual. He excelled in his studies, gaining admission to the prestigious Columbia University on a scholarship. It was here that Graham began to delve deeper into the world of finance. He was fascinated by the complexities of the financial markets and the potential they held for wealth creation. At Columbia, Graham's intellectual curiosity and academic prowess did not go unnoticed. His professors were so impressed by his aptitude for finance that they offered him a teaching position upon his graduation. However, the lure of Wall Street proved too strong, and Graham opted for a career in investment. These early hardships planted the seeds for Graham's future career in investing. His experiences with financial instability fueled his passion for understanding the financial markets. They instilled in him a sense of caution and a keen eye for undervalued assets. These qualities would later become the cornerstone of his investment philosophy and the foundation of his immense success as an investor. Graham's path to becoming the father of value investing began at Columbia University. A bright mind, Graham graduated second in his class in the year 1918. His intellectual prowess didn't go unnoticed, and he was invited to teach English, mathematics, and philosophy. However, Graham had a different path in mind. Hungry for a challenge, he headed straight for Wall Street, landing a job as a chalker at Neuberger, Henderson, and Loeb. His keen insights and analytical abilities soon propelled him up the ranks, leading him to become a partner at the firm. Now on Wall Street, Graham wasn't your typical investor. He didn't just follow the crowd. Instead, he sought out undervalued companies whose stock prices didn't reflect their intrinsic value. This, in essence, was the birth of value investing, a principle that would become Graham's life's work. Graham's approach was innovative for the time. He believed that every investment should be approached as an ownership stake in a business, with the investor thoroughly understanding the company's fundamentals and financial health. He was not swayed by market trends or the emotional whim of the crowd. Instead, he focused on the hard numbers, the balance sheets, and the income statements. This approach led him to develop his margin of safety principle, a concept that advocated for investing in stocks valued at less than their intrinsic worth. With this, Graham championed for the protection of the investor's capital and a reasonable return on their investment. It was during these formative years on Wall Street that Graham started to formulate his ideas about value investing. His experiences, the companies he encountered, the market fluctuations he observed, all these fed into his developing theory. And it was this theory that would soon revolutionize the investment world. Thus, Graham began his journey to reshape the world of investing. His innovative approach and unwavering commitment to value investing would lay the groundwork for his influential theories and teachings, setting him on the path to becoming the father of value investing. Graham's theories, articulated in his books Security Analysis and The Intelligent Investor, revolutionized investing. These masterpieces introduced groundbreaking concepts that shaped the world of finance as we know it today. Let's delve into Security Analysis first, co-authored with David Dodd in 1934. This work is often considered the Bible of value investing, a strategy that focuses on buying securities that appear underpriced by some form of fundamental analysis. The book introduced the concept of intrinsic value, a measure of a company's true worth. This value, Graham argued, could be calculated by thorough analysis of a company's assets, earnings, dividends, and financial strength. If a stock's market price fell significantly below its intrinsic value, Graham saw a margin of safety and an opportunity for investment. Moving on to The Intelligent Investor, published in 1949. Here Graham further expanded on his investing principles, emphasizing the importance of an investor's attitude towards stock market fluctuations. He argued that the stock market is a voting machine in the short term, but a weighing machine in the long run. This meant that while the stock market can be irrational in the short term, it eventually corrects itself to reflect a company's true value. He urged investors to remain patient and disciplined, buying only when prices are low and selling when they are high. Graham's ideas have had a profound influence on investors worldwide. His concepts of intrinsic value and margin of safety are now fundamental tenets of value investing. They have guided countless investors, including the legendary Warren Buffett, who once described The Intelligent Investor as by far the best book on investing ever written. Over the years, Graham's works have withstood the test of time, remaining relevant and valuable in the ever-changing landscape of investing. His theories continue to form the bedrock of investment strategies, providing a roadmap for investors navigating the complex world of finance. Graham's writings continue to serve as the Bible for investors even decades after their publication. Scene script. Graham passed away in 1976, but his influence in the world of investing continues to be felt. In the world of finance, the name Benjamin Graham is synonymous with value investing. His approach of scrutinizing the intrinsic value of a company and buying stocks when they are undervalued has become a cornerstone of investment strategy. His teachings have been passed down through generations, and his books, Security Analysis and The Intelligent Investor, are considered the Bibles of investing. One of the most notable students of Graham's philosophy is none other than Warren Buffett, often considered the most successful investor of all time. Buffett, who studied under Graham at Columbia Business School, has often credited his mentor with shaping his investment approach. He once said, "I'm an enormous admirer of his. I think his The Intelligent Investor is by far the best book about investing ever written." But the influence of Graham doesn't stop there. Many of today's leading investors, from Seth Klarman to Joel Greenblatt, have adopted his principles. They've learned from Graham's teachings that patience, discipline, and a focus on fundamentals rather than market sentiment are key to long-term investment success. Graham's legacy also lives on in the world of academia. His theories are taught in business schools around the world, instilling in future generations of investors the wisdom of value investing. His principles have become a cornerstone of financial education, and many consider his works as essential reading for anyone serious about investing. The principles Graham laid out over 50 years ago are as relevant today as they were then. They've stood the test of time, weathering market crashes, economic recessions, and drastic shifts in business landscapes. They've proven to be a guiding light in the often murky world of investing, offering a solid foundation upon which to build investment strategies. Benjamin Graham's principles of value investing continue to guide investors around the globe. His legacy remains robust, illuminating the path for those who seek to navigate the complex world of finance. And so, the teachings of this financial titan continue to resonate, echoing through the halls of finance, shaping the strategies of investors, and influencing the world of investing for decades to come. So who is the father of value investing? Without a doubt, it's Benjamin Graham. Born into a challenging early life, he overcame adversity to become one of the most influential figures in the world of investing. His education and early career laid the foundation for his groundbreaking work, and his major achievements have left an indelible mark on the investing world. His seminal works, Security Analysis and The Intelligent Investor, have become the go-to guides for those seeking to understand the principles of value investing. These works have not only influenced countless investors worldwide, but also shaped the investment strategies of the likes of Warren Buffett. His legacy extends far beyond his books, as he transformed the way we view and approach investing, championing the importance of thorough analysis, intrinsic value, and long-term strategy. Thanks for joining us on this journey through the life of Benjamin Graham, the father of value investing.